Hello, this is Paul Sine with HER Realtors, realtor licensed in Kentucky and Ohio. Sitting here with me today is Ray Rivera, insurance agent with Allstate Insurance. He's my guest on today's podcast. Hello, Ray. How are you doing today?
I'm doing just fine, Paul, just fine.
It's nice to have you here, so hope everything is going well for you today. And why don't we start into our question and answer session, and let's get things rolling.
Sounds good.
The first question I have here for you, Ray, is would you tell us how insurance premiums are determined for individuals?
Well, first, on the homeowner side, location is very key. There are pretty much how far the fire department is from your house. Then the second part is whether your house is a stick-built house or a modular house. And then all the components that go into that particular house, whether it's brick versus vinyl, solid brick, square footage. All those things determine what the homeowner premium is. And one of the big things, though, is the deductible.
Okay.
That is a prime thing. That's probably the most expensive thing on your policy when you look at it with any company, is that the deductible is the most important. A lot of companies now, the big boys, Allstate, State Farm, Nationwide, Geico, they only offer $1,000 deductibles now.
So that's one deductible, no other options.
Right. Now, you can go higher, obviously, but most homeowners, $1,000 is still a lot of money, but most homeowners stick to that area.
And I guess part of the theory behind the deductible is that you're putting some of your own money into the taking your money out of your own pocket for that deal.
Right. Insurance is pretty much made to insurance companies take on 90% of the actual risk, and that's the beauty of homeowners insurance, is that if you have a loss, whether it's a fire, wind, hail, lightning, you're going to only be responsible for $1,000 of that, which is good because obviously if you need a new roof, everyone knows those are anywhere from $8,000 on up. So when you're only paying $1,000 to get a brand new roof, or for new siding, or for your house to be repaired, that's a pretty good deal.
Okay, that's good. Good information to know. So what I know insurance also has premium discounts. I've heard if there's certain things you have in your house. Tell me about premium discounts and what sort of items give you premium discounts.
Absolutely. One of the main ones is multiple policy. A lot of companies really like you to bring their cars over. That is huge, and that's the biggest one. Obviously, you get a discount if you have a sprinkler system in your house, if you have a monitored alarm system in your house. Obviously, you get discounts too with seeing how many claims that you have or none. Allstate gives big discounts if you have no claims. No claims, and you bring your policy over, your auto policy over. It's going to be cheap.
Okay, it's interesting to know. So then, I think we said fire systems, alarm systems, and is there any the type of construction effect to the type of premium you have?
Yes, a stick-built house is going to have a better premium than a modular or a mobile home. Mobile home premiums are usually very high, obviously, because they can easily be moved. The wind can take those. So the type of house is important. Now, there are some homes that are pre-built in factories that are like 2-story houses. Those are like considered stick-built houses. So it's generally the mobile home or the modular home.
Okay. And then I know with the flood insurance, usually that, depending on the area, sometimes the government will step in and offer flood insurance. Can you tell us a little bit about flood insurance, how that works, and where that works?
Absolutely. Flood insurance is only offered by the United States government. Companies like Allstate, State Farm, we can provide it. We're just a broker for it.
Okay.
But all the prices are determined through the FEMA website, which agents have access to.
Okay.
Anyone can get flood insurance, even if you're not anywhere near water. It's available to everybody. Obviously, if you're in the middle of a cornfield and unless there's a huge flood, if you're in the middle of a cornfield, your premium is probably going to be $100 a year, if that. Now, once you start getting into flood zones, the government rates it by A, B, or C. And when you're obviously next to the Ohio River, depending on how close you are, you're going to be an A or B. And banks require you to have flood insurance. And now let's say your house is paid off. Let's say you don't have insurance. The government will make you have insurance for that particular house because they want you to be protected even though if you want to be or not.
Yep, that's one thing the government likes to do.
Yes.
Well, let's talk about credit scores. That's one of the bigger things we hear recently is credit scores impact your insurance premiums. Can you explain a little bit about that, how they impact? And
I can. They do impact your premium. However, the way I can personally speak for Allstate, and I'm pretty sure every other company does this too, we don't see your credit score.
Okay.
What we see is called an insurance score. An insurance score is comprised of your credit, how long you've had insurance, how many losses you've had. All those things get put into a insurance score. So a lot of people, when they're buying their house, say, well, I don't want you guys to take my credit because I'm trying to buy a house and you're not supposed to be doing anything about credit. Well, it's a soft hit. So it will not even show up on your credit report that Allstate went in here because we're not pulling your insurance score. We have no idea what your credit score. We have no idea what your FICO credit score is, but we get an insurance score. And that number determines where your rates are. So,
okay.
But obviously, if you have substantial credit and you've had insurance for years and years and years, your price is going to be better than someone who has not so good credit and has insurance, let it lapse a couple times, because obviously those people are higher risk, just naturally.
Okay, and what you mentioned the insurance score. How long of a history is that taken into account?
That only goes back 5 years.
5 years. Okay.
So 5 years on any type of claim. It doesn't get speeding tickets or anything like that, or just whatever claim, whatever loss it would happen to be.
Okay. And then let's say somebody's a new home buyer. They're getting ready to purchase a home, and they need to figure out insurance. What sort of minimums do they need to look for?
Minimums is obviously their loan amount. Got to make sure that is covered, and then the bank also kind of helps you determine what you need, but enough to cover the loan, enough liability depending on how much land you own. Some people have a quarter acre; their liability could be a little lower if they want. I'll suggest that, but when you got acres upon acres of land, where a lot more chances of stuff can happen, your liability limits need to be raised. And of course, personal property is derived from your home value. So that's, whether it's 10% all the way up to 75%. Those don't affect the insurance price that much. Those are really the minimums, just making sure you have your loan covered. Now, if you're over that is absolutely fine too, because you're entitled to all that money if you have a total loss.
Okay. I know most policies provide like a standard coverage. They don't cover anything exotic or anything. If you got a $200,000 home and you go buy a $500,000 Lamborghini, that's a different type of policy there. And so I think they're called riders usually, right?
Right. There's different things you can insure. Most policies don't. They include everything, but only limits. Like if you have guns, $1,500 limit.
Okay.
If you have jewelry, $1,500 limit. Now, if you schedule those things, if you have a lot of jewelry and there's a value to them, they've been appraised, it's $50,000. You can schedule that on your policy and set your deductible for that particular item, which could be $0 up to $5,000. And then that particular item is covered no matter where you go in the United States. So let's say you have an engagement ring. It's worth $20,000. You lose it in California, whether it's stolen or the diamond falls out or you just lose it in the hotel room, you can claim that. And most people put a $0 deductible, so you can claim that and get your appraised value.
So now that's for if that item was on a specific rider or like you said on a schedule, so that would be covered. Now what if I had something stolen, and this actually happened to me, some jewelry was stolen from my wife while we were on travel, And I believe the insurance company was saying they would only pay 10% of the value at that time.
Right, because in their specific policy, Allstate gives you a dollar amount of $1,500. They actually gave you 10% of what your home value would be, which is not that much. But policies normally have standards like that, and a good insurance agent will run down all the things. Do you have guns? Do you have jewelry? Fishing equipment's on there. Golf equipment's on there. Special things like that are not covered. I mean, they're covered just at a very low amount. Like some people have 18 sets of golf clubs. Only $800 of golf clubs will ever be covered.
Okay.
So, but it's good that a good agent will let you know what these are, what the minimums are, and on your policy jacket it tells you what you did not purchase. For Allstate especially, they tell you this is not purchased, this is not purchased, this is not purchased. So, a good agent will let you know. Will ask you the key questions. Guns and jewelry are like the number 1 and 2 things that are scheduled.
Okay, so these are mainly losses that happen like in the house. Like in this case with my wife, and the jewelry was stolen somewhere else. We were in a foreign country at the time. I mean, is the coverage, I guess, depending on whether it's a rider or traditional coverage, then you get full coverage, or?
Right. If you were in a different country, there's also a rider for that.
Okay.
And that would be on a premium on top of the actual premium for the jewelry itself. Because, at least with Allstate, when you put a rider for jewelry, for example, it's covered in Canada, the United States, pretty much North America.
Okay.
Now, when you go out to South America or anywhere in Europe, there's another rider for that. And it's not very expensive, but it covers you when you leave the country.
Okay. So even, again, it's advisable, even if it's just a temporary trip, if you're taking something valuable, to talk to your insurance agent.
Just to put it on there. Yep.
Okay. That's good to know. Let's talk about the reimbursement amounts. I know there's different ones, and in my own experience with the military, we used to do a full reimbursement versus a depreciated, depending on the type of claim it was. So what can you tell me about the reimbursements?
Allstate, in particular, all of our policies are quoted standard with replacement cost. Replacement cost being getting your item replaced for what it costs today. No depreciated value. There's no depreciation.
Okay.
So you have a TV, 50-inch TV cost $2,000. 10 years ago, that TV, if it's in a loss, you're getting another 50-inch TV, whatever price. If it's $3,000, you're getting it for $3,000.
Okay.
So that's replacement cost. Actual cash value, ACV, is exactly what it says. It's actual cash, and that does put in depreciation. So most banks, if you're financing, the banks kind of protect the consumer by they overlook the policy and say, okay, this can't be actual cash, it has to be replacement costs, so that they kind of protect you for that. But if your house is paid off and you're getting insurance on your own, that's a very important thing to ask, because that's definitely a premium change. Obviously, actual cash is way less expensive than reimbursement or replacement costs, but you're going to want replacement costs. And there's also different terminology for replacement costs. I know that most people are not lawyers, but there's a statement in there that says like, kind, and quality. So, for example, if you have a solid pine door in your house is on fire, it burns up, Allstate will replace a solid pine door. There you go.
Okay.
It's all said and done. Some companies will do like, kind, and quality. So it will not be a solid core door. It'll be a pine outside, pine slab, but not solid.
Hollow core inside, yeah.
You're absolutely right. And that's like, kind, and quality. And you can't take them in court for that because you signed the policy saying, I understand it's like, kind, and quality. That's how some insurance companies can, quote unquote, get away with not putting you back where you were.
Okay. So it pays to ask questions and read all the language.
Yes, and it's very boring. And honestly, if you have an agent and they're good, you can come up with any question, and they have the fiduciary responsibility to answer it honestly. Like if they say, if my house burns down, I have solid core pine doors, am I going to get solid core pine doors replaced? It's the insurance agent's job to say yes or no, or say, it's like, kind, or quality. And at that point, you as a consumer says, what's like, kind, and quality? And then it could be explained.
Okay.
Allstate sticklers on that. They actually underwrite our policies very meticulous on replacement cost because they want to know what's in the house. Granite countertops, is it a custom kitchen? All those things they want to know because they're putting that in their replacement cost so that, God forbid, your house burns down, they know, okay, this is a custom kitchen. So now they're going to allow you to have whatever custom kitchens cost right now.
Okay.
You'll get your granite back, your name brand
refrigerator, and appliances.
Yes, cabinets, tile, all that stuff will be replaced.
Okay, that's good. So, I mean, in the case, let's say, like you said, God forbid somebody's house does burn down. I mean, what's the best way for that person to, document what they had?
What I tell a lot of my customers is every once in a while, take video of your house. Doesn't have to have any noise on it. You can turn off the mute and just kind of scroll through your house. We have the technology now that would take a second and put it in a fireproof box. Like if it's a jump drive or a disc or something, just put it somewhere where you have it. That's the best way because when you have video or photo evidence of what you had, there's no debating on what needs to be replaced or what brand something was or what. 9 times out of 10, though, Allstate is very easygoing when you have 20 pairs of pants. Because when you have lost a lot. You got pants, socks, silverware, plates. They're pretty easygoing as far as making sure the customer's taken care of, especially when you're in a loss that catastrophic where you don't have a house. And that's also where your coverage for loss of use comes into play. There's certain coverage in all policies that is like loss of use. Let's say your house does burn down. This coverage will put you in a hotel, pay for your food, clothing, so that it's not coming out of your pocket.
Okay. And most policy, I guess you generalize from Allstate's perspective, but a lot of the policies are like that. They cover.
Yes, There's usually that's included on every single one.
Okay. Why don't we talk about rental insurance now? What can you tell me about rental insurance? What does it cover? Does it cover the building, the outside of the building, inside the building?
Rental insurance covers your stuff, your personal property, and liability. What a lot of people don't know is when someone walks into your apartment and they somehow break their leg or ankle wrestling around or anything, they can sue you. It's not the property owner's fault that happened in your apartment.
Okay.
So your liability would cover that. But obviously, let's say the upstairs neighbor had a leak and their bathtub leaked through the walls and ruined your computer or even made the wall cave in and just really bad stuff, you would get your items replaced at replacement cost.
Okay.
So you would, if your computer got ruined, obviously minus whatever your deductible is. Deductibles for renters policies are $500 still. So I always suggest that when that happens. But as far as the structure, the property owner's policy would cover all that. Now, when you're getting into condos and things like that, condo associations have certain declarations on what they cover. And 9 times out of 10, they cover the exterior. You're responsible for the studs in.
Okay.
So on your policy, you have to make sure that there is a rebuild cost from the studs in to replace your carpet, your sheeting on the floor, cabinets, granite countertops, whatever that you had. Now, of course, that affects the premium too.
Okay.
But condos is you have to really get the declarations of the condo association's policy that they bought.
Okay.
So that you know exactly what you're liable.
Okay. And then talking about liability, we can go back to the homeowner's insurance. I mean, is there personal liability coverage there if somebody comes and trips and falls on my sidewalk or, something happens in the house to them?
Absolutely. It's usually set Allstate as a standard. I personally put $300,000 on that. Like I said, someone slips on your steps, decides to sue for their medical bills. Your homeowners are liable for anything that happens on their property, whether it's their fault or not. So, if kids are playing in the yard and they're climbing your tree and they fall out of the tree and get really hurt, you're responsible. And a lot of people don't realize that because obviously, someone else's kid, they'll pay the bills or whatever. But if that parent decides to either take you to court or send you the medical bills, you're entitled to pay. And that's where you can file a claim.
Okay.
Obviously, if they get a couple stitches, $200 bill, no. But if a kid gets really hurt and God forbid dies, you're going to be glad you had that type of coverage
Okay.
at that point.
Yeah, and that even brings back a little bit question too. We were talking about the prices you pay for insurance. I mean, something like say having a trampoline in your yard or a pool in your yard. I'm sure that's factored into the insurance costs. And
we take pictures of trampolines and always ask that there's safety precautions taken. There's a fence around the yard or those fences they put around it. We actually send inspectors before we can clear a policy to be insured. We have an inspector that goes out. It's absolutely free. It doesn't cost anything.
Okay.
But they look for liabilities on the house, broken windows, missing shingles, trampolines, pools that don't have gates around them, things like that. And then that comes back to us, and we then call the customer and say, hey, you have a pool, but there's no lockable gate. Do something to lock that gate. Either put a lock on it, or we need to put a gate up. So those are the kind of things that before you sign the policy and everything's good, you're going to know what liabilities there are, if there is any.
Okay, that's good to know. I'm sure a lot of people with the pools and trampolines would like to know that. Now, one topic too, some people might be familiar with is umbrella insurance policies. And that's kind of like people understand the concept of an umbrella. It protects you from the rain, from getting wet. But tell me, what's an umbrella insurance policy from your perspective?
Umbrella insurance is extremely important. And I say that because it covers your house and home and any other properties you may own. Like if you're a landlord, whatever houses you have. It's very important because when you're driving on the road, you're carrying all of your assets in the trunk of your car. If you rear end somebody and there's 4 people in that car and they all got to go to the hospital, you are paying the bill. And your insurance is only going to pay what they're liable for. And at that point, you're on the hook. And your 401k could be tapped into, your equity on your house, garnish your wages. All those things can happen if you don't have enough insurance. And when you own a lot of things, you have a healthy 401k, you and your wife have a healthy 401k, you got your house could be paid off, you have a lot of cars, and you can't really predict what can happen, but if you cause a wreck that hurts people, all those things are up in the air if you don't have enough liability. What an umbrella does is, in Allstate's case, we can add another $1.5 million on top of the $500,000 you would have covered in your car. So that in the loss, if there's a chain reaction, you're responsible for 6-car pileup, which we don't hope to do, but those things could happen. You're covered. Once your liability runs out on your car, your personal umbrella takes over.
Okay, so the umbrella is like a completely separate one. It's not attached to like your home policy or your car policy.
Absolutely. It's completely separate policy, different policy number and everything, but it covers as soon as your homeowner's liability limits have been exceeded, it'll kick in.
Okay.
Same with the car. Or if you have landlord policies, once those liability limits are extinguished, the umbrella policy kicks in. And a lot of people also think that you can only have an umbrella policy if you own a house. You can rent an apartment and have an umbrella.
Okay. And what if you're, say leave the house and apartment alone? What if you're an investor, you buy rental properties, you fix them up, and does the umbrella cover them in that, or is there different insurance for that type of work?
There's different insurance when a house is going under renovation. You have to specify what's actually going on, but it would cover that. Like if that landlord house is sitting empty waiting for a renter, if someone gets hurt on that property, that'll cover that.
Umbrella will cover that.
Umbrella, okay. Well, first your landlord policy limits would cover it, and if those get extinguished, your personal umbrella will kick in. It just helps with the liability. And if you see all the lawyers on TV that say, "Hey, call me when you get in a car accident," that's exactly what they are going for.
Okay.
They know what to write the insurance company, so that the insurance company pays right up to the policy limits.
Okay, well, that's great information. Did you have any other final thoughts before we sign off?
Actually, just when you're looking at insurance, no one likes to pay insurance because everyone's attitude is, "Oh man, that's something I'm never going to use. I'm flushing the money in the toilet." Well, the best thing to think of when you're buying insurance is you're also paying for your comfortability. You're paying that. If anything,
peace of mind.
Right. Peace of mind. If anything, your family's protected. No one's going to be able to go after your 401ks or whatever savings that you guys have, because no matter what happens, even though you don't want it to happen, if you're liable for something, even the biggest lawyers, you'll be just fine. You can can sleep at night, and everything's good. So that's liability is a huge thing that no one thinks about when you're looking at premiums and things. But that's what insurance is. It makes you comfortable to drive out there so that's what insurance is for.
Okay, it's going to give me pause and make me go look at my insurance policy again after we're done here.
That's what I encourage everyone to do. That once a year. Sometimes agents call, sometimes they don't, but just look it over and just make sure, because your life changes too throughout the years. And if your house is worth more than the coverage, and you don't want to have it burned down when you've done a lot of renovations, and then it's not covered because it's not. So
your insurance wasn't there.
Always update, and of course we do at the Rob Nicely Agency for Allstate. We do free consultations, even if you're not an Allstate customer. We can look at everything and say, hey, this is what your policy says. We have no problem doing that. We have 2 locations, one in Amelia, Ohio, and one in Milford, Ohio.
Okay. And how can anybody get in touch with you if they want to give you a holler?
They can get in touch with me with email. It's rayrivera@allstate.com. And that's REY, RIV as in Victor, ERA @allstate.com. And also my office phone number is 513-718-4774. We can look over policies, and we're also doing a promotion now that if we cannot beat your homeowner's rate, we will give you a $10 gift card if we cannot beat your rate.
Okay.
The rates are extremely aggressive.
Are you licensed nationwide? Are you the local Cincinnati area, Kentucky area?
Yes, we can. With Allstate, we can insure Kentucky and Ohio in either agency in Amelia or Milford.
Okay, but if somebody doesn't give you a call, then you could still set them up with someone. Allstate's nationwide. You could set them up with someone in there.
Absolutely. Area. If they're in Indiana, I don't have my license there, but I can definitely get them hooked up there. Someone in Florida wants a good home policy because they have a bunch of losses down there. We can definitely get them with a good agent. So we are everywhere.
All right. Well, thanks, Ray, for being on my second podcast here, and it was good speaking with you.
Excellent, Paul. Thanks.